Hi there, good morning. You're watching Market Cafe on ET Now with me, Snehisha, and with me is my co-anchor, Ankita Saxena. Ankita, very good morning to you. And thank you, viewers, for starting to choose your week with us. Now, this is a show where we take you through all the things that are happening amid the world, all the global cues that you should be tracking. And in the latter half of the show, we'll also go stock specific. We'll look at all the stocks that are buzzing, that could be buzzing in trade today, and what the brokerages are keeping on their radar as well for this Monday morning. But with that, let's kickstart the show then with a global market check. And Ankita, take us through what the US markets did on Friday. The US markets have started the month of September in the green. Dow Jones has done pretty well on Friday. So take us through all of that.
Good morning to you, Sneha, and good morning to everyone. That's correct, but that's happened primarily on the back of the job data that came out on Friday. Now, Wall Street has been worried about how robust the labor market has been, and that has really been a point of concern for the Federal Reserve as well. But the jobs data that came out on Friday, while it saw an uptick in the non-farm payrolls, we did see an unemployment rate that was the highest in over a year, and that really aided the market rally on Friday. Now, also in another sign of a slowing economy and the easing pricing pressure, the average hourly earnings increased 4.3% on a year-on-year basis. That was less than the 4.4% increase expected by the economists poll by Dow Jones, and this was really aiding the market. Dow ticked up 115 points, the S&P 500 added roughly 0.1%, and the Nasdaq composite was absolutely flat actually. Ended the day in the red, but absolutely flat. Now, the major averages were up sharply earlier in the day. When the data came out, the Dow was briefly trading more than 250 points higher, while the S&P 500 and Nasdaq had climbed about 0.8% each, before they started easing the gains. Now, let's look at the European markets. European markets closed mixed on Friday as they were assessing the mixed data that really came out of the US markets. The regional stock 600 index closed flat with sectors spread across positive and negative territory. Oil and gas stocks climbed 1.9% after the analysts raised 2023 oil price forecast for the first time in 4 months in the Reuters poll released on Thursday. Now, the auto stocks fell 2.6% in trade. Across the European markets, we saw DAX that was down 106 points. CSE was down 0.3%. FTSE, however, was bucking the trend, was up 0.3% in trade. So mixed handover from the European markets. However, on the Wall Street, of course, we did see the labor market data that came out really boosting the market sentiments.
Absolutely, Ankita. So that's on the global equities front. Let's also look at what commodities like oil and gold did. And let's start with crude then, because oil prices were set to snap a 2-week losing streak as they rose for a 4th consecutive session on Friday due to tightening supplies and expectations that the OPEC Plus group of oil producers would extend their output cuts for the rest of the year. Now, the WTI crude has risen over 5% during the week, while Brent was up 3%. WTI closed the week at around 85.5 levels, and Brent on the other hand closed at about $88.5 levels per barrel. Now, analysts expect Saudi Arabia to extend a voluntary oil production cut of 1 million barrels a day into October, adding to cuts by the OPEC as well as its allies, also known as OPEC Plus. Now, Russia, which is the world's second largest oil exporter, has also agreed with OPEC Plus partners to cut oil exports further, and Deputy Prime Minister Alexander Novak has confirmed this on Thursday as well. And US crude inventories fell by more than the expected 10.6 million barrels last week, government data said on Wednesday. And commercial crude oil inventories have plunged by 34 million barrels since the middle of July. Now, lots of geopolitical and global factors playing into the price of oil. They're boosting the price of oil on the back of these output cuts. And also a weaker US dollar, which looks set to end a 6-week winning streak, has also helped oil prices further, because a stronger dollar pressures oil demand by making the commodity more expensive for buyers holding other currencies, which is why the prices of oil are expected to go up. Now, that was all on the crude check. Let's also take a look at what gold did. And gold gave up initial gains on Friday, but was still headed for a weekly rise after an increase in the US unemployment rate boosted bets on a pause in the Fed Reserve's interest rate hike. Spot gold lost almost 0.05% to end at about that $1,938 per ounce mark. So largely, crude prices are set to go up as well as gold. You can see some positivity in prices over there as well.
All right, then let's quickly take you through the events that are lined up for the week starting today. Now, we have the S&P Global Services and the Composite PMI number that is likely to come out of India on the 5th of September. We also have, of course, today is the Labor Day holiday in the US market, so Wall Street will be shut today. And UK, of course, we have the S&P Global Services and Composite PMIs on the 5th of September as well for UK and India both. Today again, we have back home, we have, Som distilleries and breweries that will be considering a fundraise via via QIP, that's on the 5th of September, and Gensol Engineering that will be considering the issue of bonus again on the 5th of September. Also on the 6th of September, we have Concord Biotech's earnings that are due, and on the AGM radar, we have Gati on the 4th of September. 6th of September, we have REC, we have CMS Infosystems, NMDC Steel on the 7th of September. So those are the AGMs that are lined up for this week. In the IPO action, we have EMS Limited IPO that will be opening up for subscription on the 8th of September, will be going on till the 12th of September. So that's the Power Pack lineup for this week, and we will be keeping a track of all these events very closely.
Absolutely, Ankita. Lots and lots of cues to keep on your radar this week. But let's start with some global macro stories we've been tracking for you this morning. And non-farm payrolls in the United States have risen sharply for the month gone by as we closed August with a slowdown in the jobs market. Payrolls grew by 187,000 for the month. Unemployment rate for the month was at 3.8%, a sharp uptick from July figures.
And staying with the jobs picture, Hollywood labor taking a hit on the back of dual strikes by both actors and writers that continue to drag. The film, TV and music sectors shed a combined 17,000 jobs in August, reflecting strike activity.
Meanwhile, Moody's has raised its 2023 US growth forecast to 1.9%, but it has cut its estimate for China next year, stating that the risk of a recession has fallen in the US. Meanwhile, China's challenges continue to mount.
And staying with China, factory activity in the country has expanded in the month of August, with supply, domestic demand and employment improving. The manufacturing index rose to 51 in August versus 49.2 in the month of July, marking the highest reading since February this year. Now, according to the survey, manufacturers reported increase in both output and total order intakes thanks to firmer demand.
And Europe is facing the impact of a double crisis, but the region can avoid a recession, says Paolo Gentiloni, the European Commissioner for Economic Affairs. He said in reference to the geopolitical impact from Russia's full-scale invasion of Ukraine and the subsequent economic hit to the European continent.
And India's solar mission has lifted off successfully. Aditya L1 has been launched from Satish Dhawan Space Center in Sriharikota on a 4-month-long journey to its destination, the Lagrange Point 1. Phase 4 of the launch has completed successfully. The Aditya L1 carries 7 different payloads to have a detailed study of the sun, 4 of which will observe the light from the sun, and the other 3 will measure insight parameters of the plasma and magnetic fields. Aditya L1 will stay approximately 1.5 million kilometers away from the Earth, directed towards the Sun. This is about 1% of the distance between the Earth and the Sun.
The Aditya L1 spacecraft has been injected in an elliptical orbit of 235 by 19,500 kilometers, which is intended very precisely by the PSLV, very unique mission mode here, with the upper stage of the PSLV taking 2 burn sequence for injecting the primary satellite for the first time. So I want to congratulate PSLV for such a very different mission approach today to do this mission of Aditya L1 to put it in the right orbit. Now, the Aditya L1 will take its journey after some Earth maneuvers. It will start its journey to the L1 point, a very long journey of almost 125 days. So let us wish all the very best to Aditya.
Important to know the behavior of this solar system in detail. There is a severe limitation with respect to the cloud conditions and dust conditions, and also the continuous watching is not possible. So this is what prompted ISRO to go ahead and launch a spacecraft exclusively for observing the sun. If we put the spacecraft around the Earth, again the observation will not be continuous. It will be obstructed by eclipses and so on. So that's why they have selected a point, the Lagrangian point they call it.
All right, and in anticipation of the upcoming festive shopping frenzy, we're eyeing the potential for a repeat of the annual surge in consumer demand. Now, this year's optimism is fueled by expectations of double-digit growth in consumer durable sales. However, global factors may elevate input costs, impacting final product prices. Now, the true test awaits as we watch retail demand during the festive season. Let's go across to my colleague Astha Chopra, who has more details on this.
As we brace for this festive shopping binge phase, hopes are high for the replay of the yearly surge in consumer demand. This time, the excitement is built upon the predictions of double-digit in consumer durables. Let's dig into it. Normal wardrobes.
So from April up to June, we had seen that the sales was growing at about 7%. Now for July, the growth of sale has been at about 9%, thanks to the fact that people are slowly coming towards this festival thought process. Our expectation is that we should be doing a double-digit growth. Hopefully, we should see a 10 to 11% growth during the season. Things that really happen during the festive season is definitely the sense of cheer that comes in thanks to buying jewelry, garments, personal items, accessories, etc. So this we expect to be very good this year.
Signs of a rebound are
reasonably very good. But I think the biggest silver lining for us has been the 15th August. After a gap of around 4 to 5 years, we saw at all the consumer durable stores, including ours at Vijay Sales, huge footfalls. This was the first time after a gap of 4 to 5 years that we saw huge footfalls coming in. And that gives us a lot of hope that this Diwali, this festive season should be one of the bigger ones in what we have seen in the last 4 to 5 years.
So that's a wrap on the festive retail journey. The rise for festival-related demand for all the products ranging from gadgets to apparel will help increase the economy. Hopefully, this season will not only light up the homes but also businesses. As the excitement for the festival begins, let's see whether the sales will exceed or match the expectations or predictions or not. This is Astha Chopra for ET Now.
Well, here's hoping for a bumper festive season there. But with that, it's time for us to take a quick breather. Don't go anywhere. After the break, we go domestic.
Welcome back and thanks for still being logged in to Market Cafe. This is ET Now. Now let's look at how the Asia-Pacific markets have opened up this morning, and these markets were mixed to start the week as investors looked to key data from Australia and China later in the week. Now the Reserve Bank of Australia will release its rate decision on Tuesday. So on the back of that, you can see ASX 200 is up almost 0.4%, almost 0.5% uptick coming in for the ASX 200. Now, China is also expected to release its trade balance for August on Thursday and its inflation rate next weekend. So, on the back of that, you've got Shanghai. Shanghai also coming in with an uptick of almost 0.5%, 0.4% uptick coming in. Also, Hang Seng. Let's look at Hang Seng. Well, these are Thursday's levels for Hang Seng, up almost 1.5% because Hong Kong's markets were closed on Friday as the city braced for the super typhoon Saola, which made landfall over the weekend, which is why Hong Kong markets were closed on Friday. So these are Thursday's rates for Hong Kong. Let's move along and look at Nikkei. Nikkei is up with an uptick of 0.3% in the green, 93 points uptick coming in for the Nikkei as well. And lastly, let's also take a look at Kospi, and Kospi is marginally flat, not doing anything, just holding on to the green by the skin of its teeth, up almost, up less than a point, so not doing anything Kospi over there. Very flat coming in for the Kospi. Let's also look at what GIFT Nifty is doing, and GIFT Nifty is currently at 19,553 levels compared to the Friday's closing of 19,435 level of Nifty. So that indicates a slightly tempered start coming in for the Nifty, but nonetheless, we'll see how that pans out for our markets this morning, Ankita.
Well, that's correct. Even the US stock futures are absolutely flat as of now as we speak. And the GIFT Nifty, of course, is absolutely flat. But we'll quickly take you. Welcome back. You're watching Market Cafe with me, Ankita Saxena, and with me is Snehi Shah. Let's move on to news coming in on the domestic front then. Uday Kotak has stepped down as Kotak Mahindra Bank's Managing Director and Chief Executive Officer with effect from 1st of September. Now, Kotak will, however, continue as a non-executive director. My colleague Harsh is here with all the details. Take it away, Harsh.
Well, yes, it's been 38 years since Uday Kotak founded Kotak Mahindra Bank, or as is now called Kotak Mahindra Bank. Earlier was an NBFC in till 2001-2. And essentially what this will mean is that in any case Uday Kotak was to step down on 31st December of this year, along with some of the other key leadership, including Deepak Gupta. But it seems that that announcement has come in 3 months in advance. He's resigned and stepped down already. And Deepak Gupta is going to carry forward the leadership role that Uday Kotak was playing with the bank for the next 3 months. Well, reasons that he cites are 2 or 3-fold. One is he's suggesting that there is obviously already a succession plan which is coming into place. So that is one. Point number 2 is that there are some personal commitments he has in November. His son Jay Kotak, who's also associated with the bank, is going to get married in November, and therefore he has lesser time with regard to carrying out that succession in a full and proper way, and therefore Deepak Gupta will be stepping in and making sure that the succession is handed over smoothly. With regard to what is going to happen with the succession, there are 2 names that have been put forth. Of course, both those names not been disclosed yet, but the preference, as Uday Kotak has suggested, is in order. So, number 1, number 2 in that order has been put forth to the RBI. RBI approval is awaited, and of course, they are well in time with regard to that announcement. So, largely no real concern. When I'm looking at notes coming in with regard to Goldman Sachs as well as Morgan Stanley, all of them continue to retain their buy rating on Kotak. Jefferies has a target price of 2,400, Morgan Stanley with 2,250, and Goldman Sachs with 2,624. And all of them suggest that it's a step in the right direction. Of course, it's a bit of a surprise, but a step in the right direction nonetheless.
Absolutely, Harsh. Thanks for taking us through all of that on the resignation of Uday Kotak. But I believe we do have one name coming in terms of who's going to carry the legacy ahead, because the RBI has yet not approved the name of the new MD and CEO of the bank. But ET now, however, has learned from sources that the bank has recommended the name of KVS Manian and one more for the post. My colleague Ankur Mishra has all of these exclusive details. Ankur, take it away.
From being MD and CEO of Kotak Mahindra Bank, 2 important questions were raised. One, who will be the next MD and CEO of the bank? And another one, what happens to the role of Uday Kotak in the bank? Will he become the non-executive chairman of the bank in near future? Now, as far as the next MD and CEO is concerned, we understand that 2 recommendations have been made by the bank to Reserve Bank of India, and subject to RBI's approval, the next MD will be chosen. We have gathered that KVS Manian name appears as the top contenders, and his name has been sent to Reserve Bank of India among two candidates. Now the ball is in the court of Reserve Bank of India to approve the name and send it back to the bank. Now, as far as the role of Uday Kotak is concerned, he continues to remain director in the board, but in the capacity of a non-executive role. Now, as far as being chairman or non-executive chairman in the future, what we understand is that bank has not made any decision yet on that front, and no application has been sent by the bank to Reserve Bank of India for appointing Uday Kotak as non-executive chairman, and that decision is yet to be taken by the lender.
Kotak Mahindra Bank is definitely a counter that will be in focus today, so we will be keeping an eye out on that. But there are some brokerage notes that have come out on Kotak Mahindra Bank. We have Jeffrey and Morgan Stanley that came out with its note today. Let's first quickly go across to Jeffrey's view. Jeffrey is maintaining a buy with the target price of 2,400 rupees per share on the counter. Now, they feel that the bank has emerged as a fabulous franchise, and a smooth takeover under the new leadership is going to be the key for the bank. So that's the key trigger that everybody is basically watching out for. And on the back of that, Jeffries is maintaining a buy on the counter. Morgan Stanley is maintaining an equal weight with a target price of 2,250 rupees per share. Now, they feel that the bank is well placed to capture growth opportunities. They also feel that the loan mix is shifting towards higher margin assets. And of course, they're preferring larger banks given the relative better valuations. And on the back of that, they are maintaining an equal weight on Kotak Mahindra Bank. So these are the two notes that have come out this morning on Kotak Mahindra Bank, a counter that we will be watching very closely in today's trading session.
Well, that is the end of an era coming at Kotak Mahindra Bank. But with that, let's slip into a very short break. On the other side, we'll tell you all the stocks that could be buzzing in trade today and the ones that you should be keeping a track on, so stay tuned. Welcome back. You're watching Market Cafe. It is time to move on to news coming in on stocks now. And the first stock is TVS Motor, which is an excellent play for the festive season. Historical data suggests. But how is the demand environment for TVS Motors going forward? Well, my colleague Ashesha is here with all those details. Over to you, Ashesha.
Well, yes, historical evidence suggests that a strong seasonality factor plays out for TVS Motors in the months of September and October. So we tried to analyze the return data for the last 12 years, and we found out that only in 1 out of the last 12 years, TVS Motors has reported negative returns in the month of September. An average return for the month of September in the last 12 years stood at about 10.1%. Also note that a strong September was followed by a strong October. So average return in the last 12 years in the month of October stood at about 11.2%, and only in 3 out of the last 12 years TVS Motors has registered a negative return, which means it is a strong play on the festive season. And remember, this year festive season is 3 weeks longer than usual, so Diwali is in mid-November instead of mid-October, and hence that could also be a short-term catalyst for the stock, at least in the near term. Now remember, companies TVS X, which is an electric vehicle scooter, was launched recently, and analysts expect this particular play to be a short-term catalyst for the stock. As far as the export demand environment is concerned, it was sluggish over the last few quarters, but the demand environment is improving, and in fact we are seeing some improvement in this quarter as well, in the second quarter of FY24. As far as the ICE scooter segment is concerned, company has been registering good market share gains. Their electric two-wheeler segment is also showing robust growth, and the company has a strong pipeline of electric two-wheeler launches in the coming couple of months. So these are some of the positive triggers for the stock. So yes, historical evidence suggests that there's a strong seasonality factor that plays out on the stock in the month of September and October. Let's see how it pans out this year.
All right, Rachesha, thanks for taking us through that. Now, TVS Motors, one stock that we'll be keeping on our radar and watching out for in the next few weeks. But what are the other stocks that you should be tracking and keeping on your radar for today? We have Ansh, my colleague, joining us in the studio to take us through just that. Good morning, Ansh. Take it away.
Good morning. So, Coal India will be the first stock in focus for today's trading session on the back of the operational updates. So in August, Coal India had a good month actually. They produced 52.3 million tons of coal, which is up by 13% on year-on-year basis. Plus, the coal inventory at the mines reached 45 million tons, which is an increase of 46%. Apart from that, Deepak Fertilizers will also be in focus as company's subsidiary Performance Chemiserve has secured 2 gas purchase agreements from GAIL to fulfill its gas need for next 3 years. Hindalco will also be in focus as company has acquired 26% stake in 7 renewable power. This move is a part of the plan to develop and operate their own power generation resources. Apart from this, RVNL will also be in focus as they have won a contract worth 282 crore from Madhya Gujarat Viz Company, the execution period for which is 31 months. Maharashtra Seamless also won an order worth Rs 157 crore from Oil India and IOCL to supply seamless pipes. Biocon acquires Avia Pharma's New Jersey oral solid dosage facility for $7.7 million. Lastly, M&M will be in focus as IFC plans to invest 600 crore in company's subsidiary in tranches.
All right, Ansh, thank you so much. We will be tracking all those counters very closely. But the other stock in focus is Bajaj Finance. That will be on the back of its management meet, where CLSA noted that the demand remained rather strong during Onam, but rural demand could come under pressure. Vinny is joining us with more details on that. Take it away, Vinny.
Good morning, and absolutely the key highlights that have come in from Bajaj Finance meets, and this is a note that is from CLSA. They're saying that the company is seeing good growth, but the concern, one factor is that, rural growth, maybe that could be a concern given that the rainfall in the month of August was a bit subdued. So Maharashtra and Rajasthan, that is a worry in terms of the weak monsoons could create some pressure on the rural demand there. But other than that, during the month of Onam, they've seen very good demand coming in, especially in the southern India, that has been quite strong. Asset quality trends, they said, have been strong as well, but the management is trimming 10% of their disbursements in unsecured loans. Other than that, they expect to reap some benefits in terms on the liability side with the exit of HDFC, and key client questions were around the liability management, the impact of Geo financials and banking transactions as well. Now, CLSA is maintaining a buy given a target price of rupees 9,000 per share, and they believe that they are well poised. Bajaj Finance is well poised for growth as well as profitability in the medium term. Personal loans doubled in 3 years, being mispriced by the industry is what the word is coming in from CLSA, and they believe that the well-placed liability management for the foreseeable future is something to watch out for, as well as the company is aiming to be a 4% retail credit in India over the next 4 years. So this is the key highlight that we're keeping an eye out on.
Absolutely, Winnie. Thanks for taking us through that. We will be keeping an eye out on that stock today. But let's let's look at the GST data and talk about it. And the Ministry of Finance has released GST data for the month of August. Now, 1,69 crore rupees is the gross GST revenue that has been collected for August 2023, recording 11% year-on-year growth. And the Revenue Secretary has said that the GST collections have grown by more than the nominal GDP, and this is despite no increase in the tax rates. Now, this is because of better compliance and improved tax collection efficiency. Let's deep dive and let's take a look at all the numbers then. And the GST collection for the month of August has come in at 1.59 lakh crore compared to the 1.65 lakh crore coming in July. Slight slip over there. Central GST mop-up has come in at 28,300 crores for August compared to the 29,800 crore mark for the month of July. State GST mop-up at 35,800 crore for August compared to 37,600 crore for July. Integrated GST, that's the IGST mop-up at 83,300 crore for the month of August compared to that 85,900 crore mark for the month of July. And lastly, the GST cess mop-up has come in at 11,700 crore for August compared to that 11,800 crore mark for the month of July. Now, the centre's August GST revenue post-settlement has come in at 65,900 crore rupees compared to the state's August GST revenue post-settlement at 67,200 crore rupees.
All right, moving on then. Banks are in good space and HDFC Bank is a contra bet, according to Samir Arora, who's the founder and fund manager at Helios Capital. Listening to his take on financials, Zomato and the pockets he sees growth in.
According to us, all the times, by the way, we show this in one of our presentations, that nearly no fund, nearly ever, has got even the performance which the 150th stock of the index has.
So there's no FOMO, you're saying?
Correct, because there's so many of them.
Yeah.
Imagine that if you just rank last year's rank, the 150th stock was from the index, and you're not talking about some non-index stock, was up 16%. Which fund, general diversified fund, was up 16%? None. In the 18 years, I have only managed to get the 150th stock performance 3-4 times for the full fund. And really nobody ever gets it, or once in a while somebody gets it. So that means so many stocks do well. So if so many stocks do well, why bother about FOMO? You could use that for Tata Motor if you so desired. That it doesn't matter, you are not going up alone. So let me choose my factors which I like, and maybe 10 stocks I thought will not do well. So in theory, there's 140 more that are going up, and I can choose from that, but I don't need to compromise. I think that is the big picture.
But since you talked about it being a flexi-cap fund, is there a bias that you have right now, given that mid-caps are the ones which are at an all-time high, and maybe some value in large caps right now?
We don't know that. The fund manager will decide, but broadly, in a big picture sense, if you look at our history, it'll be 50 to 60% large cap. Because, we like the big fellows, which is the banks. And
which are not doing anything
No,
right
that
now.
is good. That is, you are storing something for the future. Means you have to keep chiseling away. So the good thing is now mid-caps,
They're charging.
They are charging or waiting, like in a relay, you're waiting for your turn. There is no way that if you believe that flows are coming in from domestics and from foreigners, that one day plus minus a few months, it won't happen.
No, I don't know if these goodies came via Zomato, but I know that is a stock that you'll look at very closely. But recently, there have been so many IPOs hitting the market, but I believe that you've said that they're very overpriced. What's the view?
So on Zomato, may I say that you were the first guys we told when it was 52. The thing is, when it is falling every day, to come and say that we own it or we've just bought it, rather than now when everybody is buying it.
Are you selling it now then?
No, we are not selling now because अब वो ठीक है, वो Blinkit की story बना रहे हैं, अब चलने दे सकते हैं क्योंकि it is in proper this thing, and they are doing well. So on the new IPO now, I haven't seen all of them, but the ones which are fellows, so broadly they are like that drone fellow and all. It's too much.
Why there's so many block deals happening? Just so many block deals, promoters after promoters.
Beyond anything.
Beyond
that
what does that mean?
But this is showing the appetite of the foreign investor on the other side, because the seller is also mostly foreign in these.
No, even promoters are selling this.
But PE guys mostly, let's say. And the other side is the domestic, and they feel that you won't be able to buy it on the screen because they're slightly liquid, or the size of the Indian industry has become so big. We never had it in our alliance days when I was the biggest mutual fund manager in the private space in equities. So it is just the size. But main thing is that you are supposed to have this kind of in every market.
Okay, let's split the IT space into two. The traditional business.
And the newer guys.
Newer
means
the so-called the SaaS guys, the new age tech. And when I say new age, the specialized IT companies. You go to MapMyIndia, go to RateGain. These are specialized.
Those we have, by the way.
Those
we have KPIT also, and we have RateGain also.
Okay.
But
so
we don't have these regular
the
TCS,
typical
Infi and HCL Tech and all that.
But within that, Samir, I can divide that traditional model into two parts. The old business and the new business. The old business is something which will grow at 7-8%. And the new business which will get challenged because of AI. So old business is a function of what happens to the US economy. And US economy is making a comeback. Beginning of the year and now, the outlook for US macro has changed. So will that incrementally change the way how outy cycle will move?
The thing
now?
is, I don't think those company things have changed. You know, simple thing is look at the hiring of these fellows. They are not hiring. They themselves don't believe. They are not honoring their school commitments or whatever.
Yeah.
So फिर अब वो अपने आप ही they are showing to you.
Cash-rich balance sheets.
So then why are they acting like this? Why are they negotiating salaries of a starting guy by saying give another exam? I don't have to give names of all these fellows. I mean that is also otherwise. What does it show about their own confidence?
Helios is hiring what, right?
Huh?
Helios
is hiring more than Wipro is hiring because they're net.
That's why I asked you this.
But what are the contra bets in the market? Is there anything contra right now or undervalued?
My number one holding is Contra, HDFC Bank. Which hasn't done anything.
That's
for
also
3 years.
right.
Consensus has become contra. Can you imagine HDFC Bank being called a contra call? What times are we living in? What times are we living in? The darling of the market has become a
But by the
contra
way,
bet.
we met them. They had come to Singapore. I think they are very good. Let's see.
What is the consensus bet then?
Consensus bet might be ICICI then in that case.
What about Geo Financials?
Geo Financials, you know, if it went to some 180, I'll buy. See, we just made a thumb rule that for the Reliance shares, we can give them, say, 10-20% discount. And for the cash, you give them, say, 2.5, doesn't matter. And that is the price. But you can't give a premium for the Reliance share. That Reliance itself is a good company, and then you give another premium for holding it.
And it was always part of the balance sheet. Earlier, for the main Reliance treasury was always part of the balance sheet.
That, just simply... So it is because who knows beyond that? But it will do well is one part, but it will hurt many others is another part.
Is there a frenzy, Samir, in defense railways? Or the orders are justifying what the stock prices are showcasing?
I don't like railways or I don't like anything where government is a big customer. But defense we own because defense there is no choice also. And you know, you might, because there are only 3-4 of these companies, you are not really winning on L1, you are basically being assigned these orders. So, you know, you might get paid on time because the government views you as basically their arm.
Yeah.
So if you have to make the next thing, you know. But the railway guys getting orders and all, I have this simple thumb rule. Okay, let me ask you. So my big picture thing is that in the end, many of these guys don't get paid on time, so therefore they are hurt. But according to me, the guys who get paid on time get doubly hurt. Why?
I don't know.
Because then they bet up and take even bigger bets and then they don't get paid on time. In the end, they are not getting paid on time.
All right, that's the word coming in from Samir Arora of Helios Capital. But with that, we're out of time on this edition of Market Cafe. But you don't go anywhere. Stay tuned to ET Now because the market will take all the action ahead.